In 2026, America is going to boil. And what does that mean? What does it look like? What are we talking about boiling? Well, everything I'm going to talk about in this video, I'll explain how it's getting worse and it's going to become much more relevant now. And I'll talk about how we're going to end of the year and when this is all going to play out. I thought the AI bubble would pop in October. I did. And if not then, by November, those 3 months, September, October, November, didn't happen. I was wrong. I'm wrong plenty of the time. I honestly only always tell you what I truly believe, though. So before we start, I'm going to ask you to put in the comments below if you agree with me. I'm wrong plenty of the time. Do you think that 2026 will be the year that this economy boils like a bunch of frogs in a pot? The heat's already on. We're already in the pot. And soon we're going to start to feel the real world effects of the boiling water. Everything has been building up exactly as I foretold for a long time, to the point where maybe it didn't happen in October, but a lot of things are going to go the wrong way with the economy in 2026. I truly, thoroughly believe that, and I'm going to act as if. And don't try to get every 5-10% gain. You don't need to get every penny. A lot of people are letting FOMO pull them back into the market, and they're just getting involved. The last people are going to jump in the game of hot potato or musical chairs. And if you like the fact that we don't have sponsorships, please support us by clicking the like button. And I always show you the charts of delinquencies and bankruptcies and how they're all accelerating. Now, as this recession rolls into town and as we proceed into a boiling 2026, it's not going to get any easier for the people who are already delinquent or defaulting or at risk of losing their homes. It won't get easier, and the water is going to boil as expressed by a rising unemployment rate. A lot of firings have already happened that have not yet been factored into the final numbers, which we may or may not ever get. You don't need to know the numbers of unemployment to understand what's going on. Just look around you in the lineup at the Starbucks. The effects of the boycott Trump movement and the effect of the lower tourism and the lower retail sales for American companies because people are angry at America and they're fighting back, all of that's going to become a factor now. You guys have seen or heard about how Las Vegas is like a ghost town in some ways now, or it's slowed down a lot. Florida has slowed down a lot. What else is boiling to the surface is the awareness of the economic situation we are in. The debt levels are very clearly obvious now, and people are understanding because there's the ability on this digital soapbox to explain to people what's really going on and why, when they told you that the economy is strong, you could point to the fact that it absolutely was not. And that was just another example of you being lied to. But I will say one thing that you need to really let this sink in. Politicians are not going to be able to fix this problem. No matter who, no matter what, no matter anything. This problem cannot be fixed now. Politicians are going to try. Don't let yourself be fooled by the fact when someone's talking about how they're going to fix it to actually believe that they're going to fix it. And the most worldwide known, clearly obvious bubble ever is the AI bubble. But the fact that everybody sees this bubble is the only thing that's telling me that maybe it won't pop as soon as a lot of people expect. I believe it's going to absolutely pop, and I think it's going to be just like the dot-com bubble. I was right on the front lines of that one. It's going to be just like that. It's going to play out the same as every mania and overexuberance has in the history of mankind. But it's a question of when. It's all about timing. If you're too early, I always tell you guys, I'm always early. If you're early, you're still wrong, especially if you're getting into more active trades. You don't want to be early. You want to time it well. And the thing is, how do you time the AI bubble? It will pop. It's a question of when does it happen? Well, now we're going into the end of the year, so I don't think anything much is going to happen at all for the next couple of months. You've got Christmas holidays coming up. We just got over Thanksgiving. The new year, no one's going to have their eyes on the ball. You're going to be looking at the wrong things. You're going to be relaxing. You're going to be shoveling your driveways. I don't expect anything too monumental to happen. There will be tax loss selling, so if you're looking to get a deal on something that's gone down in price, a lot of people will sell their losing investments for tax reasons at the end of the year. But this overall affordability crisis is just going to spread across the economy. Prices are going up with inflation. Inflation is going to have a resurgence. And now we're getting the effects of the inflationary prices because of the tariffs, the extra import taxes levied against American companies, which then makes the products that they make cost more, and the services they provide cost more, which then goes to the price tag that you pay. That is the result of the tariffs. Money out of your pocket. And they say, look, we've created or generated this money. They didn't generate it, they just moved it. It's a shell game. And with higher unemployment, and if we get into the recession, the affordability will just get worse and worse and worse. So if you prepare for it and expect it now ahead of time, start making some moves now, by the time it gets really bad, you'll be in a lot better shape than if you just wait for it to arrive and you say you're going to react then. So, for example, try to save up some money. Don't take any risks. Don't take a vacation. We'll go to dinner for a little while. And I tell you this, I go, there'll be a time to live it up. This is not the time to live it up. I'm telling you that a little bit of wisdom now will go a long way 6 months from now. And what's going to be a surprise to no one is that they're going to lower the rates at the end of the year one more time, pushes things like gold prices up. But the thing is, it's so widely telegraphed or widely known, the results of the potential rate increase are already being baked into the pie. You see gold prices go up like crazy. Yesterday, they went up $50 an ounce, and I think silver was at, wow. A lot of these mining stocks that we're talking about in the Peter Leeds newsletter are jumping up by 10% a piece. And speaking of the newsletter, check out this. We hit another $1 million subscriber again. When the rates are coming down, quantitative easing is going to go up, and all of that means that the US dollar will decline. We have a dollar crisis on the menu. I don't know when it's going to happen, but it will happen. And I got to couch this whenever I talk about it. This is not a political statement at all. I'm just making an observation about a human being. Donald Trump is clearly being affected by accelerating dementia, as his father did. And that actually will matter in a lot of ways. And now, as he's clearly slowing down, as anyone who has elderly parents knows, as he's clearly slowing down, it doesn't get better or stabilize. This kind of thing only gets worse. And so what does that mean for you? Like him or hate him, but what does it mean for you in the society and the economy? It will have follow-on effects as far as the eye can see. And remember to put a comment telling me, if you agree with me, tell me why I'm wrong, that the economy is or is not going to boil in 2026. This is going to be, in my opinion, a horrendous year for the economy and everybody involved with it.